Let's start with the typical refinance. Very simple. A consumer chooses to refinance for three major reasons. Either they're looking to take advantage of today's low rates without actually taking any equity out of the home, no cash out. That's called a rate and term. The other type of refinance is more of the cash out to debt consolidate or for any personal use. And the third type of refinance, which is not really too common in today's market, is for home improvement or for reinvesting back to the property to add a second floor or to increase the square footage of the property.
Okay.
As far as a short sale is concerned, a short sale really is a different type of homeowner. It's a homeowner who has hardship and who's tried, I would hope, with the right type of counseling, to speak to their lender, to see if their lender will offer any type of programs to keep them into their home. There are a fair market of homeowners who, due to other financial pressures, unemployment, disability, what we call act of God, divorce.
Act of politicians and traders and then the economy and all itself?
You know, pension funds and so forth. They could all be considered, I guess, act of today's market, today's economy.
Fair enough.
Their pressure is so overwhelming that not only are they economically challenged, but their passion for home ownership has faded, where they're giving up and they're saying, you know, let me be proactive to do damage control, because the worst thing a homeowner can do is walk away from the home. Getting back to the short refinance, the best game in town cannot be beat. Most people say, before a bank will help you, you must be displaying financial hardship. What does that mean? Some people think it means you must be delinquent on your mortgage. Not true. The platform for the short refinance is actually rolled out for homeowners who have not been delinquent, who are paying on time, who every month when they make out that check, they're asking themselves, what is going to come of this? Is there anyone that's going to help us? Because you hear of modifications. In order to modify, usually a lender won't listen unless you're delinquent. The short sale is the other end of the spectrum, where you've basically given up and now are working with your mortgagee to get out from under. There's a huge gap in the middle there of homeowners who are also in a hardship. And what is that hardship? They owe more in loan or mortgage debt than the home is worth today.
How do homeowners know the difference between modification
and a short refinance?
And a short refi?
Well, the quick answer is they don't know the difference. And here's why. You will never hear a short refinance mentioned from your mortgagee. It is the best kept secret. You can ask them, and then you'll listen, and when you hear, yes, we will entertain a short refinance.
Wait,
although not offered, but you can ask.
Just to make clear to the public, you just said you'll never hear it from your mortgagee. Define mortgagee.
The mortgagee is the present servicer of your home loan. Now, let me clear the difference there. Some servicing companies are actually just that, a third party who services your loan as far as accountability. But the actual investor on the end, they're the ones that have to be posed the question, will you take a short refinance? Now, why would a lender, a bank, entertain a short refinance? I'll tell you why. Because statistically speaking, homeowners that are upside down on their loan, on their home, with these toxic loans, statistically speaking, have a great probability of becoming one of those delinquent mortgages. Non-performing loans are a problem, not for the homeowner, or not just for the homeowner, but for the lender. We know of all these lenders that have shut their doors. Why? Because, simply speaking, too many lenders have come across too many homeowners that are defaulting on their payments.
Now,
If we were proactive, Tyler, if we were proactive and said to our mortgagee, $500,000 over 30 years with a toxic loan, or $380,000 today, let's talk. Help me, help you, help us.
so we're working together as a compromise.
Absolutely, because there's a lot of similarities between a short refinance and a short sale. One major similarity is that the lender or mortgagee does control the short refinance as well. Once approved, they're going to make sure they dot their I's, cross their T's, that it's been the short refinance that's good for the borrower and the terms that are acceptable to the mortgagee.
Well, that's absolutely fair enough. I mean, it seems like a perfect compromise all the way across the board and a stimulus to the economy.
Oh, absolutely. We're all going in the same direction.
Yeah, well,
Our government is not proposing short refinances. I guess there's political reasons why not. But could you imagine if lenders would say, okay, let's say across the board, we take home values, not what you owe, but what your home is worth today. Let's say that if a homeowner, based on their credit, income, and asset, could walk into a bank and get approved of today's value, assuming their credentials are there for credit, income, and asset, and then take that commitment, go to their present mortgagee and say, this is what they're willing to give me. It requires that we work a settlement out, because if we don't, I may wind up with statistics. I don't want that. I'm trying to be proactive. Tyler, we've had homeowners who the first thing they say when they speak to us is, I simply don't believe it can get done.
well, you bring up an amazingly interesting point, because right off the bat, in my mind, the first thing that I would do as a homeowner in trouble is go after the property tax that I'm paying based on a value from a year or 2 years ago.
To try to do a grievance of some sort?
Do a grievance to lower my payment to stay alive. However, what's my motivation to stay in the home if I have a mortgage at $400,000 and the property value has slipped to $300,000 and you're coming up with a full solution for that to keep them in their home?
I'll try to wrap that up in a nutshell. You know what's happened in the past 2 or 3 years? Because the ability to obtain a home was rather simple in the days of subprime and non-conforming lending, we've lost that. By that I mean pride in home ownership. And it's really tough to bring that back. Pride in home ownership is when it's special, when not everyone could be a homeowner.
So let me ask you, I mean, reverse mortgages are great for 62 and over. It's a mini stimulus plan, you know, even though the government doesn't talk about it.
A look-alike.
The short refinance is something to keep people at home, taking pride in their home, keeping neighborhood values up, fair market value.
Setting them up straight where they have actually some equity in the home, where the combination, and we haven't spoken about this yet, Tyler, but bear in mind that we are in another low interest rate opportunity. It was first, the last low interest rate opportunity were in the early 90s, the refi boom, if you will. Due to the economy and the housing crisis, we're back in that again. I mean, it's been a long time since the 30-year fixed rate was in the mid to high fours where it is today. So a short refinance, amongst getting, let's face it, a principal reduction on a refinance, which people still don't believe until they've managed to experience firsthand.
It sounds like lotto to me.
Well, it's like winning the lottery.